Fintechs have very much exploded onto the space in a very short span of time. I mean, India's home to what, 2,000, 3,000 plus fintechs. A bulk of them have just come about, by the way, in only the last 5 years. We have some 33 unicorns, we have 22 sunicorns and whatnot. What I want to ask, however, is what next? How has the role of fintechs evolved and how it will continue to evolve to be able to lend to the new economy? And since we have a panel of experts, as you can see, a lot of them specifically catering to a certain segment of society, we'll also cover how they're trying to bring about inclusion for the female borrowers as well. So on that note, thank you all very much for being here again. And Shinjini, I'll start with you about the role of fintechs itself. Traditionally you had the banking model, the gaps that they couldn't fill was filled by NBFCs. Further down the line you had MFIs, the payment banks, and then technology encompasses everything. Are fintechs in the future going to remain these ancillaries, so to speak? Or do you think they can be the disruptors we thought they'd be when they emerged onto the space, but didn't really get that far?
So let me start out by saying that you contextualize this in the context of lending, because you took the example of largely NBFCs and banks. And of course, NBFCs are also non-lending NBFCs. But one of the advantages in the age of new technology, which is the platform economy or the digital or the mobile or whatever, where we are living now, is this ability to bring together a lot of the financial products, which has never been an ability that the financial system has had. So because traditionally financial system has been built, because distribution channels had to be built manually, so they were typically created vertical by vertical. I mean, I ran a consumer bank, and we would, even as late as now, we would have verticals that were wealth, credit cards, lending, secure lending, like that, right? But what this platform provides us, enables us to do is to bring all of this together. So a person is the user. So you as a user on Amazon are a holistic person who can be buying all different types of products, right? But it's you as a user and the platform as the platform. Unfortunately, in financial services, it's very divided. So insurance, wealth, lending are separate. So to my mind, what will really change the game is that we all talk about data, right? In the previous session we talked about data. Since the afternoon we've been talking about data. So today what's happening is the data is being created. But the ability to use that data to cater to a customer in a wholesome way is still very constrained for various reasons. I'm not going to get into that, and I'm sure there are everybody else on this panel who will have a view. But to my mind, the real game changer will be that ability to actually, then what Mr. Kama said, na fit hai, free hai. To make it fit and to make it free, you actually need to be able to pull that power together. Today we are not there. So, yeah.
On that fit hair, free hair note, let me ask Srinivasu actually, because he's actually in the payment space, especially when we talk about UPI transactions, etc. Bahut fit hai and bilkul free hai. Is that the right business model for companies who are for profit? Especially companies like you that remain in the pure play payment space, haven't really ventured into the lending tech space, which many of your peers seem to be doing.
Before I answer that, I'll just address the earlier question Shinjini answered. Over the last 7-8 years that I've done many of these forums, the debate has gone from will fintech upstage banks to saying will they compete with banks to then saying will they collaborate with banks to your now question will they just become ancillaries. So that's an interesting way the space has moved. And in part that is addressed by your question to me, which is that, and what Mr. Kamath referred to earlier in his session, technology, innovation, capital availability all spurred the fintech space in a certain way. But it's at the end of the day a regulated space, and it's a space for serious players. The entry bar was historically low, which enabled innovation to happen rapidly, which is why you see a number of fintechs and number of business models. So there have been definite pluses from that environment. What has also spurred that growth is the host of things came together: COVID, UPI, people having to transact. regulatory framework, a government policy which saw vision of saying that if you make the UPI as a free payment method, digital payments will advance very rapidly. So that's kind of come true. With that said, therefore, we're all at a very key point that payments are growing rapidly. A majority of them are mandated to be free. So where do you make money? That question still remains unanswered. I think from an industry perspective, there is hope that at some point, as markets or the product stabilizes, revenue or factor on that can come back. But in the short run, yes, fintechs are looking at other divergent ways to where they can make revenue and profits.
Well, I think the fintechs are quite hopeful. If you talk about hope, just look at the payment aggregator license applications. I think some 180, 200 companies have applied to be payment aggregators. Is there really space for a 201st player to now come into the ecosystem, in a way be able to grab a larger market share? Or do you think the space itself is too commoditized by now at this point of time?
My views on this topic are fairly well known. I think when we talk of technology-based companies, whether it's India or anywhere in the world, there's never space for more than 10. There is a process of evolution where hundreds compete to be in the 10. It's just a question of who survives to be in the top 10.
So who will survive? Who will be the top 10 in the current crop of players that we have?
Time will tell. If we all had that crystal ball, the remaining 190 would never participate, right?
Okay. Since you're not giving us that list, Sucharita, let me come to you. The point that Srinivasu also raised, first we started with fintechs, taking over some of the banking operations, and we said they'll collaborate, and now we're talking of them as ancillaries. Where do you stand on this particular matter, and do you think there are gaps that fintechs are able to fill, which even in the future, as banks become more and more tech first, they'll probably not be able to get into?
Yeah, so I just want to build on Shinjini's point around just the way our financial services system is built. It's built like product manufacturers. So in some sense, customers need solutions, holistic solutions. So for example, in India, 90% of India actually works in the informal sector, which has tremendous volatility of both income as well as expenses, as much as 45–50%. And therefore, by definition, you need to combine savings and credit, for example. And you probably need insurance for shocks as well. Now, for this customer who is extremely time poor, time is money, to say that, okay, now you will need to go to a bank for savings, to an NBFC for lending, and to XYZ insurance company for insurance, it's simply not going to happen, and the costs of distribution are going to multiply. Fintechs have a role in bringing all of this together into making this one coherent solution. Fintechs also have a role in inclusion.
Are you referring to fintechs becoming super apps, offering all sorts of BFSI services onto one platform?
It could be in the super app format, in a supermarket sense, but finance is very different from FMCG products, right? It's not like soaps that you just go and, look at 10 brands and I buy, I don't know, the pink one like Barbie. Just given the movie's popular. So it's not like that, right? So you need advice. There is inherent advice whenever you sell a financial service, because a financial service manufacturer is always making a call inherently in the sale that this product is good for you. Now, what fintechs can do is really understand the customer, what the customer needs, and bring the right set of products together. So yes, combine the products, but not like a supermarket, much more like a curator.
Okay, combine the products, but not like a supermarket. Chetna, let me ask you, fintechs don't have the legacy problems of traditional banks. They're empowered with a whole lot of data that they could use to make lending where perhaps traditional players cannot. Why is it that we still see, as we were talking about before, fintechs even today solving for the problem of that 1 or that 10% of the population not really going down to the last mile, with a few exceptions, of course?
So let me say that, what fintechs are not doing it, or instead of saying that, I feel very strongly that on the supply side, where are we failing to listen to people? And for bringing that, I would just like to narrate that how actually the fintechs or the banks or the financial sector can learn from the people. And I would just like to narrate how Mann Deshi Bank or what were the learnings we had from the women. I mean, we keep on talking about the borrowings and lending to the people, and even when we talk about the financial inclusion, we talk about the lending. But sometimes you see that people, I mean, in our case, when nearly 2.5 decades back, everyone would think that, you know, we need to lend poor women, right? But with me, it was like, women came forward and they said, I don't. I mean, Kantabai, who was a street vendor, she said that I don't want loan, I want to do savings. And banks were not ready to provide that product which will allow her to save 3 rupees or 5 rupees a day. And she said, I went to different banks and banks denied opening the account because she's not an affordable client. And so then you said that, okay, if banks are not opening the account, why not start a bank for women like Kantabai who want to save 5 or 10 rupees a day? And that's how we applied for the banking license. Of course, the license was denied by Reserve Bank of India because these promoting members coming with a community capital, they couldn't read and write. So the bank, RBI said that we cannot issue the license. Now the whole thing is that community is coming with the capital, not with the investors' capital. We want to save. And so then women said that, okay, we will go to Reserve Bank of India. And you know what they said? They said we cannot read and write, but we can count. Ask us to calculate the interest of any principal amount. If we fail, don't issue the license. But tell your officers to do it without calculator and see who can calculate faster. Needless to say, we got the banking license, right? But you know what I would like to say is here the lessons are that even if we don't go to school, we can manage the fintech product, we can do the digital banking, and the challenge is on the supply side that how do you make the life easier for them? That is number one. Understand their cash flow, understand their ecosystem, and provide the solutions. So I would say, Ritu, that what I have learned from the last mile population, either it is for banking or it is for fintech, the one lesson I have learned is never give poor solutions to poor people. If you do that, you are successful.